Welcome back to the Daily Crypto Roundup. Coming up on today's episode, we're going to cover why Bitcoin is holding above the $90,000 level despite a brief pullback, what's driving today's market structure, and why analysts are largely describing the latest move as controlled rather than concerning. We'll also look at fresh corporate Bitcoin accumulation, new developments in crypto market infrastructure, how macro conditions are feeding into short-term price action, and what all of this means as we move further into the year. Before we get into it, just a quick reminder that the XRP giveaway is due this Friday. As always, all you need to do to be in with a chance is get involved in the comments. We'll be announcing the winner at the end of the week. And if you're enjoying the show, make sure you're following or subscribed. And if you can take a moment to rate the podcast 5 stars, it really does help with discovery and getting this in front of new listeners. Let's take a look at where the market is sitting right now. Bitcoin is trading just above $90,000. Holding that level after easing slightly from recent highs. Ethereum is sitting around $3,100, remaining relatively steady and continuing to track the broader market. XRP is trading around $2.20, still showing relative strength compared to much of the large cap space. Solana is hovering near $110, consolidating after earlier moves. Binance Coin is trading around $900, continuing to move sideways. Dogecoin is sitting near 15 cents, broadly in line with the market. Cardano is trading just under 41 cents, still range-bound. And rounding out the top 10, Avalanche is sitting around $14, holding key support. Now, let's get into today's stories. Bitcoin has been holding above the $90,000 level through the latest session, particularly during Asian trading hours, following a brief pullback earlier. Market data suggests that the move lower was relatively shallow and short-lived, with prices stabilizing quickly rather than accelerating to the downside. Analysts have pointed out that this kind of behavior tends to indicate underlying demand rather than panic selling. Several outlets reporting on today's price action note that the pullback appears to have been driven more by short-term positioning and leverage than by any specific negative headline. There was no major regulatory announcement, no sudden macro shock, and no crypto-specific event that would normally be associated with a sharp sell-off. Instead, the move appears to reflect a modest reset after Bitcoin approached a region where positioning had become crowded. That theme has been echoed across multiple market reports, which highlight that leveraged long positions were reduced during the dip. As price moved lower, some of those positions were forced out, briefly increasing selling pressure before buyers stepped back in. Importantly, once that leverage was cleared, prices found support and steadied. From a market structure perspective, this is being described as a controlled move rather than a breakdown. Volatility did increase slightly during the dip, but it quickly subsided, and there was no follow-through selling. Analysts tracking derivatives markets have noted that funding rates cooled as leverage was flushed, which can help reduce the risk of sharper moves in the near term. Macro conditions also played a role in today's trading. Reports indicate that broader risk sentiment softened slightly following renewed discussion around monetary policy expectations. While there were no dramatic developments, markets across asset classes showed some caution, and crypto was not immune to that. However, the reaction remained measured, suggesting that crypto is increasingly trading with a degree of internal structure rather than simply reacting to every macro headline. Now, before we get into the big stories, we're going to pause here for a quick word from our sponsors. Stay with us.
I earned my degree online at Arizona State University. I chose to get my degree at ASU because I knew that I'd get a quality education, they were recognized for excellence, and that I would be prepared for the workforce upon graduating. To be associated with ASU, both as a student and alum, it makes me extremely proud, and having experienced the program, I know now that I'm set up for success. Learn more at asuonline.asu.edu.
In corporate Bitcoin news, Strategy has confirmed it has resumed Bitcoin accumulation, adding just over 1,280 Bitcoin in its latest disclosed purchase. The buy was completed in the opening days of the year, rather than today specifically, but it is being reported and digested by the market today. The company spent roughly $116 million on the purchase, paying an average price just over $90,000 per Bitcoin, and bringing its total holdings to around 673,000 Bitcoin. That keeps Strategy firmly positioned as the largest known corporate holder of Bitcoin globally. What's notable here is not the timing of the announcement, but the behavior. The purchase was made during a period of consolidation, rather than a sharp dip or breakout, reinforcing the company's long-standing approach of steady accumulation rather than reactive trading. Analysts note that this kind of buying continues to act as a signal of long-term conviction, even as short-term volatility remains part of the market. Another institutional-related development today involves index provider MSCI, which has confirmed it is maintaining its current methodology regarding companies with significant Bitcoin treasury exposure. Under existing rules, the weighting of such companies is capped, limiting how much additional Bitcoin exposure can flow into certain passive investment products tied to MSCI indices. While this does not change existing allocations, it does have implications for future flows. Market observers note that index methodology can influence how institutional capital is allocated over time, particularly for funds that track major benchmarks. The decision highlights the ongoing process of integrating digital assets into traditional financial frameworks, often through incremental adjustments rather than sweeping changes. We did touch on this story earlier in the week, but it's back in focus today because there has been a clear expansion of what was originally reported. Earlier this week, Morgan Stanley filed initial paperwork related to crypto investment products. But today's reporting confirms the bank has widened that push, adding further filings that include not just Bitcoin and Solana exposure, but also a potential Ethereum trust as part of a broader crypto product lineup. That matters because this is no longer a single, isolated filing. What we're now seeing is a suite of planned crypto products, which signals a more deliberate and structured approach rather than a one-off experiment. Large banks don't tend to file incrementally unless there's internal confidence that demand exists and regulatory conditions are moving in the right direction. Today's coverage is also focused less on speculation and more on process, how these products would fit within existing regulatory frameworks, and how traditional wealth management clients could gain exposure through familiar vehicles. So while the headline isn't brand new, the scope has clearly changed, which is why it's worth revisiting. This isn't about short-term price action. It's another example of traditional finance continuing to build out regulated access points to crypto, even during periods of market consolidation. In the technology and infrastructure space, an AI-driven crypto intelligence platform known as DeepSnitch AI has reportedly attracted more than $1 million in early-stage funding. The platform focuses on on-chain monitoring and analytical tools designed to help traders and investors navigate volatile market conditions. The interest in AI-based crypto tools reflects a broader trend across the industry. As markets mature and competition increases, participants are increasingly looking for more sophisticated ways to analyze data, manage risk, and identify trends. While projects like this are still relatively early, they point to continued innovation beyond simple trading applications. Elsewhere, broader crypto market coverage today highlights that while prices have eased slightly, the overall market has remained relatively resilient. Bitcoin has been reported trading between the low 90,000 and mid 90,000 range across various sessions, with Ethereum and other large-cap assets broadly following suit. Some reports note that geopolitical considerations and cross-asset dynamics are still influencing short-term sentiment. However, the lack of extreme volatility suggests that many participants are taking a wait-and-see approach rather than reacting aggressively. This is consistent with a market that is consolidating rather than trending decisively in either direction. There has also been attention on activity in the Solana ecosystem, where some companies are experimenting with treasury strategies that involve staking and yield generation. While still niche, these approaches highlight the range of ways digital assets are being incorporated into corporate and institutional strategies, beyond simply holding Bitcoin. Another notable development involves continued experimentation by major financial institutions with blockchain-based infrastructure. Reports indicate that large banks are still actively testing digital asset issuance and settlement systems, even if these projects remain largely behind the scenes. While not headline-grabbing on a daily basis, this steady progress underscores the longer-term integration of blockchain technology into traditional finance. Across the market, analysts have emphasized the importance of distinguishing between short-term price movements and broader trends. Today's dip, while noticeable, has not materially altered the underlying structure. Support levels have held, liquidity has remained available, and there has been no sign of disorderly trading. The broader takeaway from today's news is that the market appears to be digesting recent gains rather than reversing them. Corporate accumulation continues, institutional frameworks are evolving incrementally, and innovation within the crypto ecosystem remains active. At the same time, macro uncertainty and positioning dynamics are still capable of producing short-term volatility. For now, the focus remains on how prices behave around key levels, and whether demand continues to emerge on dips. Analysts will be watching closely to see if Bitcoin can maintain its position above $90,000 and whether leverage remains in check following the latest reset. That's where we'll leave it for today. As always, drop your thoughts in the comments, make sure you're following the show, and if you haven't already, please consider rating it 5 stars. And don't forget, the XRP giveaway is due this Friday. And as always, we will see you at the top.